For years, this bell has been the sound of success, but recently it's been sending warning signals around the world.
Oh, they don't like them, buddy. We're down 315.
Warnings of financial institutions, banks, and companies in trouble. Trouble so deep that even a $700 billion bailout plan aimed at restoring confidence is in doubt. But at the New York Stock Exchange, it's all about risk.
The stock market is driven so much by human emotion in terms of the decision-making process of whether they should buy or sell. And the stock market always goes to extremes. We have bubbles, and then we have major sell-offs. Clearly, we're at the negative end of that extreme at the moment, and there's no way to legislate or dictate what human emotion will do. But with so many issues out there, not all of them positive, but so many unknowns, it's the worst of all worlds for the stock market, because the one thing the stock market cannot deal with is unknowns.
One of the biggest unknowns in the U.S. right now is whether this bailout will work. The other is who will be the next president. The bailout is controversial. Many voters worry it will help Wall Street, but not Main Street. It's also seen as heavy government intervention in a capitalist system where markets are supposed to regulate themselves. Jeffrey Feinberg is a lawyer who used to be in finance. His claim to fame is that every financial institution he once worked for no longer exists, the most famous being Lehman Brothers. Despite this somewhat original record, he's against the bailout plan.
What government can't do, and really has never done, is government can't create jobs, government can't create wealth. What they can do is they can get out of the way, and they can let the free market, they can let a true capitalist economy function properly. And none of that happens without risk. That's what this is all about. It's all about risk-taking. And some people take measured risk, and some people take outsized risk. And those who take outsized risk should be allowed to fail. And anybody who invested in people who take outsized risk should be allowed to fail and should suffer the consequences of that particular risk.
Yet the fallout from these risks has been enormous. The U.S. deficit is over $11 trillion, job losses are up, and the subprime crisis has gone far beyond American shores, with many European governments also intervening to keep troubled banks from going under. But some say the risks are greatest in New York City, where 1/4 of all jobs are somehow tied to Wall Street.
Black people, $5, and white people, $20.
One European who's taken that risk is Olivier Goya. After working for an advertising firm in New York for 10 years, he launched his own production company. He admits that right now business is slow, but he's optimistic that things will pick up. Advertisers will eventually put the money out to encourage wary consumers to spend. There's always a risk.
The young French people who've come here have taken the risk of leaving Europe. They're now embedded in the American system in the sense that working hard and taking risks can pay off. Yes, there is some concern because there's no safety net. There's no unemployment benefit if they lose their jobs. And here, job losses can happen very quickly.
Manhattan's skyline boasts some of the most expensive real estate in the world, thanks in part to Wall Street's huge salaries. And New York has also been favorable to many expatriates who are paid in euros. But now there is concern that with today's financial crisis, this could change.
There's no doubt that we are all a bit worried. We're worried about us, Europeans living in the United States, and particularly in New York, where we're paid in euros. For the past 2 or 3 years, when the dollar's been down as low as 160 to the euro, we admit things were very good. Now it's around 135, so on average we're earning less, and that is always a worry. But it's all part of the game.
This is the Barbès restaurant in Midtown Manhattan. Omar Baluma, who came to New York 10 years ago, is the owner. Many of his clients here work directly or indirectly for the financial market. And like many restaurant owners, he's noticed that people are eating out less, spending less. But he wouldn't dream of leaving New York.
I learned long ago that one creates one's own security. Coming here, I've fought hard. I've learned that to survive, one has to fight. It's a system that, once again, I've accepted. I'm aware of the risks. I take risks every day. I take risks opening restaurants. I take risks closing restaurants.
It's estimated that job losses on Wall Street this year will cost New York City alone $50 million in lost revenue. One reason, the average Wall Street salary is $280,000. And for the taxpayer footing the bailout package, this is a bitter pill to swallow. Kenneth Koinberg is Swedish. He says the problem is the U.S. government has intervened but not taken ownership.
The Swedish model, is a socialist model. So basically what happened in '92 was that when it was the big financial crisis in Sweden, the government actually took ownership of the banks. And of course, in capitalism country, ownership is not supposed to be from the government. It's supposed to be from the public and from the people. So it wouldn't work here. The taxpayers are going to pay out money that they're never going to see again.
Felix Rohatyn is no stranger to financial turmoil. In the 1970s, he was credited with saving New York City from bankruptcy. He's also no stranger to politics. He served as ambassador to France during the second Clinton administration. He says the next president will need to convince not only Americans but those beyond the U.S. that current financial market rules must change.
The most important thing, as far as I can see it, is to have the level of confidence coming back, that people shouldn't be terrified about what's going to happen to their savings, what's going to happen to their jobs, what's going to happen to the future of their children. And that has to come to some extent from the next president. Of course, the next president by himself can't dictate what the economy is going to do, but certainly can have a big impact on what kind of policies are put in place.
The economic crisis is by far the biggest issue in this presidential election and has given Senator Obama a comfortable lead in the polls. But political pundits warn the race isn't over yet and that opinion polls, like the markets, fluctuate.
Well, I think, there was a political issue here, whether at Main Street or Wall Street, that this bill was going to bail out. The fact is, it's in everybody's best interest, both here and around the world, that financial markets, wherever they are transparent and there is confidence in them. There's no question in my mind that this will happen. It just takes time. It's always darkest before the dawn.
This statue of George Washington is across from the New York Stock Exchange. It's where he took his oath as first president of the United States of America, a country built on the principle of liberty and all the risks, both good and bad, that go with it.